All right, hello everyone, good afternoon. This is about the size of crowd I would expect on a Saturday afternoon after lunch. So thanks for showing up. And real quick, just want to say thanks to the space, Wyatt and the team. This is such a cool venue. I'm a Denver local myself, so having this has just been really great. We've got a handful of Fold employees in the Denver area, so we've done lots of events. If you're not a member, if you're local, consider doing that. This is a great spot. So. Okay, Wolfe Repass. I'm Chief Financial Officer at Fold. This is going to be a little bit of a mix between our own story to going public and some key lessons learned along the way. If anyone in this room is involved with taking, maybe a quick show of hands. Does anyone know who Fold is already? All right, that's a great turnout. Thank you. Is anyone currently a Fold user? Smaller, but good. I have treats up here. I have free gift cards. So for those of you who are already customers, we can come get one afterwards. On the going public side, there's a lot of different ways that someone might be involved, whether you're a lawyer, whether you're a finance person, whether you're accounting, whether you're in the advisory teams at a Big Four or something. Has anyone been through the process in this room from any capacity? Okay, so I can just lie to you guys and you'll believe me. It's great. And I think that makes sense. The statistics around going public are really interesting. Every year in the United States, there's about 30,000 companies that are startups, brand new, about 30,000. There are currently about 4,500 companies publicly listed on the NASDAQ and about 2,500 public companies currently listed on the New York Stock Exchange. So about 6,000, 7,000, whatever my math was, total publicly listed companies. Very small percentage, less than 0.1% of companies will go public for various reasons. As many of you who are probably stock investors know, it's not just the cream of the crop that goes public. There's a lot of different reasons to go public. There's a lot of awesome, super successful, cash-flowing private companies that don't want to deal with the regulatory hurdles of being a public company. But for us, and for a lot of companies, these are some of the considerations that people make, or companies should make, when deciding whether this is a journey they want to pursue. So the most obvious one for a lot of privates is liquidity. So you've got shareholders, whether you're a VC-backed or a family and friends-backed company, or you're an individual solo entrepreneur, having access to liquid shares is obviously an appeal for the hard work that you put in. You want to get out somehow. And for Fold, that's very much part of our case. We were a Series A funded, mostly venture-backed company. We did not do a Series B. And last spring, when we were deciding whether or not to do a Series B, this opportunity to go public via SPAC came up, and we pursued it, thought it was a good opportunity. In the top left is probably one of our biggest reasons for doing this. Our business is consumer financial services. We have debit card, credit card, bank account, Bitcoin exchange, etc. All those products are individually profitable. They have good unit economics in and of themselves, but they take scale for a company to be successful. You have to have a lot of volume, a lot of customers. To do that takes money. Until we went public, we spent basically no money on marketing. It was all organic, word of mouth growth. A lot of companies in our situation do that. And getting access to capital markets is a really good way for us to accelerate growth. The ability to raise capital in various ways is quite substantial compared to being a private company. So that was one. And then the trust piece too. Fold's been around since 2019, and before that, there were derivations of our business. We've survived multiple bear markets, and the reason we've done that is because we've been focused purely on Bitcoin, purely on being compliant with the frameworks and the regulatory structures of the products that we offer. But 3 years ago, the Celsiuses, the BlockFis, the Voyagers of the world weren't doing that necessarily, and they're all gone. So being a company that gets to a public level, you have to pass audits, you have to pass the SEC review. It does build a brand for us that says, hey, these guys are trustworthy. And I think that was a big piece for us as well. This is for anyone who's a builder, for anyone who's potentially interested in going public in the future, has a company that may or may not. This is just a short, probably non-comprehensive list of things that are good to consider in the preparation stage. It is quite an administrative burden. And if you're in legal or if you're in finance, you're going to take the brunt of it. I think just a couple things I'd like to highlight that are specific to us as a Bitcoin company. So in the internal readiness phase, you have to get audits. Previous to us going down this path, we had never done financial statement audits. I'm an auditor. I was an auditor at PwC for 10 years. Our controller is the same. And so we had that background. And so our books were like pretty clean, not perfectly clean, but pretty clean. But we had to get an auditor, and we talked to 10 different audit firms, I think maybe 11, Big Four, regionals, small mom and pops. And for various reasons, each of them like or don't like the crypto industry and the Bitcoin industry, or even our product-specific industry. We ultimately went with a company called Markham. They were called Markham at the time. They were the 13th largest CPA firm in the country. They just recently got merged with CBiz, so they're number 7. The reason I went with them is because the partner on the account has been doing Bitcoin and crypto-related audits since 2015. He took Grayscale public back when no one even knew what Bitcoin was. They were going down that path. So that was a really, really awesome thing for us to have that level of expertise going into the SEC review process. It made that a lot easier. We're a relatively simple company when it comes to Bitcoin. We're not doing DeFi. We're not doing yield-bearing strategies. We just have Bitcoin exchange. We have Bitcoin rewards. We have a Bitcoin wallet that we offer. So from an audit perspective, it wasn't crazy challenging. But some of the things that did come up that might be interesting are, one, custody. I think the question came up earlier. How do you custody Bitcoin for yourself or for your customers? And what controls do you have around those? Full part of our business is we do hold Bitcoin in our treasury. We don't really like to say we're a Bitcoin treasury company because we are different than that. We're focused on our OpCo. But we used to hold all our Bitcoin with Unchained. Unchained is a great company. I love Unchained. I've used them personally. We've used them as a business. We had a multi-signature vault with them, and multiple of our employees held physical keys at their homes. Going public puts your name and your face all over online. It's a little bit more of a risk. It's just created a risk that we didn't want to deal with that. At the time, Unchained did not have their newest product, which is a tri-party custodian agreement, which allows you to continue doing a multi-sig without holding those keys in your own house or wherever you want to hold them. So that's a great product. Check it out. But we ultimately went to for purposes of getting through the process, we went to BitGo. Which is a non-custodial model. It is a custodial model. So we took that risk decision to say, hey, we're no longer going to be able to fully control our keys on our own. But they do have a great set of controls that allow us to mitigate that risk. But the other thing that's interesting, SOC reporting, so the controls behind what BitGo or what Unchained do get audited. There's these big reports that come out. The auditors love these things. And it's important as a business, whatever size business you are, if you are doing those custodial models, to maybe check with them, say, hey, do you guys have a SOC report? What type of SOC report is it? And does it cover the right controls around your business to give you comfort that your Bitcoin is safe? Those are probably two of the bigger things that we dealt with. Outside of that, it's mostly a disclosure process. We had 80 pages of risk disclosures in our S4 that we filed. If you read any of the more recent ones, it's a similar story, and most of them are extremely negative sounding. If you read like, oh, you're going to hold Bitcoin, it's not a tangible asset, all the things that a Bitcoiner today might call FUD, you have to disclose that and say this is important. But the SEC likes that stuff. We got lucky for, let's see. Yeah, this is Fold's timeline. We went public via a SPAC. Multiple ways to public. There's traditional IPOs, there's SPACs, there's reverse mergers, etc. A SPAC, for anyone who doesn't know, is effectively a company creates a blank check company. They raise money, they put money into that business, and then they spend the next few years going to look for a company to acquire. They acquire that company, the company takes whatever the residual cash is in that account, and now the company becomes the public company. So that's the SPAC. It gets quite a bad rap in the market for some reasons that are probably valid. But for us, it was a really good opportunity, and we did ours in about 9 months. But we benefited greatly from timing. And this was totally unintentional. We couldn't have predicted this, but we announced our merger with the SPAC on July 24th of last year. We were at the Nashville Bitcoin conference. 2 days later, Donald Trump was at the Bitcoin conference saying he's going to be pro-Bitcoin as part of his platform for his presidential run. In November, obviously Trump won, and later that month, Gary Gensler said he's stepping down. So those three things had nothing to do with Fold. We just got very lucky. Since that time, there's been a lot of companies that have gone through the SEC process. Prior to then, it was very, very difficult for anyone in crypto to get to that point. So a little fortuitous, we went public on Valentine's Day of this year, February 14th. So my wife was super happy about me not being at dinner. Meet the parents. If for any of you who are accountants or finance people, these three organizations are basically my bosses now, in addition to our auditors. And before, obviously, you have accounting rules, you follow the AICPA, maybe you're even getting a small company audit. The world in which we operate as finance professionals today is significantly more rigorous. Quarterly reporting being just one of those things. Anything we do that's material, which is a subjective term, gets put into an 8K. Everything we do is watched and disclosed. So one of the most interesting things about being a public company compared to private is that as a private company, I could be standing over there eating Qdoba with one of you guys, telling you about where I think Fold's going to go, what my product is going to do, what my forecasts are going to be. Do you want to be a partner with me? And now I have to be very careful about what I say because it's not public information. And there's just a lot more rules that have to get followed. The other thing is on the product side, if you're a builder, if you're building a company, as a private company, you have a higher degree of failure tolerance. If you say you're going to launch something in 3 months and it takes you 9 months to launch that, it impacts less people. If you do that as a public company, it directly impacts your share price, which directly impacts your ability to continue raising capital, et cetera. So the chess game has evolved for sure for us, and it's been good. I have one of the most, I think, impactful things for me. I hired a CFO advisor. This is my first role as a CFO, and I do not by any means think that I know everything. I engaged a consultant who has been a CFO of multiple public companies. And when I engaged him, it was towards the end of the SEC process. And I was super excited because I was like, man, I've been working so hard. We've been working weekends and nights and holidays. And he just laughed at me and said, you've just reached the foot of the mountain. He's like, this is going to continue for a while. And this is some of the stuff we deal with now. He wasn't wrong to most extent. But one of the things that's most interesting for finance professionals, my job has turned into about 80% capital markets and investors relations stuff. Going to New York or Boston or Texas or wherever the investors are, engaging with analysts, trying to tell the story, and thinking a lot more about that on a day-to-day basis. It's been really fun. It's not something they teach you in school. If you're not from a banking background, it's a sink or swim moment. So it's been very fun. We've done really well, I think, as a company, sort of embracing those challenges and getting our sea legs under us. Okay. I think that is it. if you ever go public, there's a lot of things that, will be unique to your own individual circumstances, but these are probably my main takeaways. I think knowing your why do you want to go public in the first place is obviously the first thing you have to answer. Start early, build a team, create the story, and maintain focus. I put touch grass there too because my wife used to tell me I need to go for walks quite a bit last year. So that was helpful. Maybe I'll quickly turn it over to Q&A. Any questions from anyone? Yeah, it's a good question. So the SPAC we went with was put out by Cohen. Betsy Cohen is, she's been around for a long time. She actually came up from the legal side. She started her own bank in Philadelphia in the 1960s and had done a lot of additional banking work since then. And she's just sort of a legend. So she had a great reputation. Her SPACs have been successful. A lot of SPACs are not. If you look at her track record and the team at Cohen, it was good. We had a mutual connection with them through one of our other investors. For a traditional IPO, so SPAC and traditional are a little bit different. SPACs typically set ahead of time. For a traditional IPO, it's the bankers will build the book, so they'll build the demand, and then depending on how much demand it is, will determine the price. And that price usually doesn't get set until, I'm not sure exactly, a couple weeks before, typically. I would have hired internal legal counsel. We actually did not have internal legal counsel. We used external counsel. Very expensive. Very good to have a big team to help you with any issue you're having, but having someone in-house to sort of deal with that side of it would have been really helpful for not just me personally, but for our business. We've since added our internal team, and they're awesome. Make everyone's lives way easier. Yeah, it's a good question. We currently are on QuickBooks. We've been on QuickBooks. We were a small business for a long time. Doing an ERP change during a go public process was just not an option for us. So had some great conversations. We've explored other systems, and I think that'll be a future decision. Yeah, absolutely. And this is one of the reasons why SPACs get somewhat of a bad name. So what happens is if you remember how these things are formed, they've got early investors who put money into a SPAC. They don't even know what the target company is at that time. So they don't know who Fold is. Their cost base is extremely low, like a lot of times a penny or less. So by the time you go public, they now have liquid shares that are way in the money, regardless of whether you drop from $10 to $5 to $3. So they're still making money. They're going to put sell pressure on. Some of them might like the story. They might like the business. They might want to be around. We did have a lockup. It was a 6-month lockup. It expired August 14th. If you look at our share price, you'll see it's trading around like the $10 mark. That was the fixed price. And then we dropped, and we've sort of been steady since. The big drops are from those sell-offs from those early shareholders. And that's not uncommon. It's not something Fold did. We didn't release bad news. That's just the reality of the SPACs. What was kind of like the social and movie you encountered being one of the first? Yeah, it was really. I think it was a fun moment for us. We say we're the first public Bitcoin financial services company. Obviously, there were miners ahead of us. The Grayscales of the world were ahead of us. But from a pure play, like we are offering Bitcoin services to customers, we're still one of the only ones. You got Kraken coming in. You got Gemini coming in. Coinbase is obviously there, but they're focused on more than just Bitcoin. It was just a really cool moment for us. I think it was like a nice little thing to hang our hats on and say we got there first. Yes, absolutely. I think I put this in here actually. Yeah, cultural changes. So going public, you bring in a lot of new people. There's a lot of new roles that are required from the regulatory side. The product side, you need to build faster, higher quality products. And what that means is you got new ideas, new faces. And so maintaining and shifting that culture has been a challenge for Fold that we knew was going to happen. And it's been a great one. We brought in some awesome people who have upskilled us across the board on pretty much every department. So definitely you go from sort of like a fun, like private startup type vibes to a more professional, mature company. All right. Yeah, one more. Lightning payments. We do. You can pay for. You can buy gift cards. So merchant gift cards with Lightning. We do not have. It's on the roadmap. Actually, our COO is going to be here sometime soon. I'll let you bug him about it. But it's a very highly requested product, and it's definitely on the roadmap. Yep. Yeah, it's a good question. So we do have a Lightning node. I'm not a technical person, so my attraction to Bitcoin was primarily on the economic side. As far as the running the nodes and building that stuff on your own, well beyond my level of expertise. I don't necessarily disagree from an ethos perspective that that's a good thing to do. But yeah, I'm gonna defer to other people for that one. All right. Any other questions? Otherwise, I think, yeah, one more. Before I came to Fold or before, yeah, so I was the first finance and/or accounting person at Fold. I joined in early 2021. We were a very small team, less than 10 team members. So I came in and did accounting, finance, tax, IR stuff. Since then, we've expanded. We have about a 5-person team on the accounting side and about a 4-person team on the finance side. All right. Thanks, everyone. Hopefully someone else gets to do this journey.